On November 7th, I called the reversal. I made money while everyone else was thinking the great reset is here. The difference, I stopped chasing Miami bottoms. See, most traders, they treat the market like Tinder. They see a baddie, so they swipe right. They want that Instagram flex, that one night stand trade, that screenshot with all of the emojis telling when I told you that was the bottom. But here's the thing. Just like that one night stand, this type of behavior only looks good on social media. But in reality, they're using Klarna to pay for their Taco Bell. It's all a facade. I lost more money than I care to admit chasing bottoms that looked perfect but had some serious emotional damage. You see, there's two types of bottoms. There's a natural bottom, which is boring, takes time, great with the family, patient, wifey material. And then there's the Miami bottom. Looks amazing, everyone's chasing them, but they're gone by the morning, leaving you with regret and a maxed out credit card. In this video, I'm going to show you 3 signals I use to tell the difference so you stop catching falling knives and start catching some profits. If you're tired of getting rinsed in a fake reversal, watch this entire video. This is how you know when the market is actually going to reverse. Let's get into it. How to know when the market is actually going to reverse instead of just throwing darts. On November 7th, I called the reversal. You can see I bought at 134 on November 7th. Here is the screenshot from my brokerage. I bought right on this candle right here off this flag. And then I knew the market was going to gap up on Monday. And you can see the market gapped up pretty massively. This was about a 2% move on QQQ. So total on this trade, it was about 13%. Okay, so that's a pretty good gap up. But the question is, and the question that's in your head right now is, well, Ellie, how did I know you would gap up? Luckily, you're going to watch this video and I'm going to teach you exactly how I knew the market would gap up. But first, there's 2 types of bottoms. Okay, there's a natural bottom. So the natural bottom has a healthy bounce. It's smooth. It's well crafted. Okay, it's sturdy. Eats good food. It's a good natural bottom. You can see it's very smooth. Price comes down and then goes back up. See, this is the Miami bottom. So Miami bottom will show you a beautiful flag, right? And what happens? That flag breaks the lows and then crashes down into the abyss. Okay, so it looks really good, but unfortunately for the Miami bottoms, it doesn't last. That flag will not hold. That flag is not the bottom. It is actually just a start of the next trap to the downside. Versus the natural bottom has a healthy bounce. It's smooth. It's very much curated. And please pay attention to this. It's extremely important before we move forward. But first, just so you know, if you tap the link in the description, I literally trade live for free. So you can come trade with me. I also post my thoughts. I posted this trade in there as well. But yeah, it's free. Just click the link and come join. So yeah, there's my plug. It's not really a plug. It's literally free. All right. So there's something you need to understand. It's called the time frame hierarchy. So a lot of you have this backwards. So that's why I include this slide. I don't know if you know this, but the daily is king. Okay. This is king. That's why there's a king crown here. The daily is king. Okay. Then the 30-minute. Then the 10-minute, then the 3-minute. So I even put a little peasant down here, okay, with his scythe, and he's getting wheat for the king, okay? Please understand the time frame hierarchy, okay? The daily drives the 30, which drives the 10-minute, which drives the 3-minute. A lot of you are doing this in reverse, where you look at the 3-minute, then the 10-minute, then the 30-minute, then the daily. That shows me that you don't understand how trading actually works. You need to understand the time frame hierarchy. I've made plenty of videos about this. Please study. Make sure moving forward you don't make this mistake. Don't be a peasant, be a king. So what is it? What are the 3 signals for a reversal? Signal 1, a major level is holding, okay? And now, while making this slide, I knew people were going to ask me, well, Ellie, what's the major level? Well, here they are. It's the daily EMAs. The first EMA I use on the daily is the 8 EMA. It's also purple. So if I post charts and you see the daily EMA there, it's going to be purple. So that way your charts will look like mine if you use my colors. Feel free to change them up. Don't recommend it, but yeah. So these are major levels. First thing is the 8 EMA. Next is the 20 EMA. So I use the 20 EMA on the daily as well. Here's a new one. Get ready. Plot twist is the 50 EMA. This is extremely important. And lastly, I use the 200 EMA. So this is all derived from a moving average system that I'm not going to get into. However, EMAs work a lot better than moving averages, especially in the era of algo trading. And lastly, whole dollar cycle levels. Okay, so what's a whole dollar cycle? A whole dollar cycle is 100, 200, 600, 500, etc. Those are whole dollar cycle levels. Notice, nothing in here says, well, Ellie, the previous day low held, or the previous day high, or blah, blah, blah. Or this random level I have going back to 1982 is a major support during the, I don't know, the pre-dot-com crash. Like, none of that matters, okay? It's always, okay, if I'm looking for a reversal, it's always off one of these levels. It's either a daily EMA or a whole dollar cycle. Very rarely am I looking back to the 1967 cotton crisis and pulling my support resistance from there. It's irrelevant. Reversals are not going to happen off of, again, say you just had a random number, okay? So like 66767, okay? 67, oh, you get it, okay? So it's not going to randomly bounce off there. It's not a real level. It has to be a major area that all traders are looking at. No objection or subjection. I don't know the word, but no, people can't really deny that that level is there. If that's what you want. You want concrete, okay? You don't want anything fugazi. Signal 2, red to green reversal. This also goes for the bearish reversals, which I've hit, who knows how many trades of those at this time, but red to green reversal. So you probably have seen me in a chat or something like that. I'll put like R to G or something like that, or just write red to green. So what am I actually talking about? So we can see this stock opens here, goes down to the lows, and closes at the highs. So look, it starts the day red, meaning this part of the chart down to lows is red. The trend is bearish, okay? Now, the second part of the day is this action right here, okay? So this is bearish action, and this is bullish action. However, price is not red to green yet. The only way it becomes red to green, if I can figure out how to get my eraser here, so let me erase it all, is if it closes at the highs. That is key. Notice the high of the day. So price went from red to green. Now, here's a little fun fact for you. Why do I care about price going red to green? It's because on the daily, it'll print a candle that looks something like this. I'm not going to go into why that's important. You can kind of go in ChatGPT and figure it out yourself, but this is extremely important. Red to green. I learned this in small caps. I'm telling you, these types of setups will literally change your life. This is not 20% scalp land. This is 300, 400% life-changing, needle-moving, portfolio-moving type plays we're talking about here, okay? So please pay attention. Signal 3, the VIX breakdown. Recently with the market volatility, if you're watching this later, then it might be different, but I've been talking about the VIX a lot, but I'm really not going to go too much into detail about that for a YouTube video, just because most of the audience doesn't really care. But for those that do care, signal 3 is you need VIX breakdown, okay? Or a VIX reversal. So in this case, the market went from red to green instead of, green to red. So what am I looking for? I'm looking for the VIX to break down. Look, it started here and trended up. You can see it's a beautiful trend up, okay? The market's selling hard. If we go back, okay, look, the market's selling really, really, really like a lot. Like it's dumping. It's going to the abyss. And the VIX is also increasing. That means fear and fear and fear is increasing. However, this is key. It actually breaks the 8 and the 20 trend, okay? This is the 10-minute time frame. So it breaks the trend, sets that lower high, and really starts to fade. Now, that's all fine and dandy, okay? It's all fine and dandy that the trend reversed. That's great. But the VIX also reversed. It broke that key 20 level. The only thing I'll really share about you when it comes to the VIX is a VIX over 20, volatility is here. There's no hardcore dip buying. Under 20 or a break of 20, you can rest assured that your longs will likely be safe overnight. So you can see it opens up, it hits the highs, and then boop, back down to the lows. Now, when it comes to the actual reversal trade, okay, I took on TQQQ, you can see all 3 signals hit. Signal 1, a daily level has to hold. Okay, so this is the daily 50 EMA here. Notice it's red. It holds to the cure, okay? It holds to the penny. Sorry, I don't know why I said that. But holds right to the penny. And you can see, price opens, comes down. The low of day also lines up with the daily 50 EMA. It's called confluence. And then goes to the high of day, completing the red to green signal. Okay, so that's 2 out of 2 signals are done. However, we still need VIX to also line up with our thesis. Remember, every time we take a trade, you want as many good signs to take that trade. Okay, we're not just this is not a previous day low buy. Okay, this is not. No. It's not a previous day low dip buy. This is a daily 50 EMA, red to green VIX breakdown reversal. It sounds a lot more complicated when I put in a sentence, but it's really simple. QQQ went up, VIX went down and closed below 20. That means on Monday, you're going to have a lot of people who get squeezed out during the Sunday night session on futures, causing the market to gap up. Because remember, funds can't click in and out of positions as fast as we can. Okay, so it takes them a little bit to cover, manage the risk, etc. Now, let's talk about the actual risk reward of the trade. So here's my entries and here is my exit. So I bought November 7th at 1:34 and I sold November 10th at 10:37 a.m. Okay, you can see I bought for $102 and I sold for almost $112. That is a massive risk reward. Okay, so every 100 shares I bought, I made about $10 a share. Okay, so it means every 100 shares at $10 shares profit is $1,000. Okay, so I have 100 shares. What's my risk? Well, my risk, if I bought 100 shares is $2.69, meaning the max I could lose is $269. Okay? Now, most of you piss that kind of money away trading 0 days to begin with. So before you come at me for trading shares here, you have no concept of how real trading works. Most of you are comfortable with losing $200, $300. For my international audience, likely not. However, hardworking guy in America, girl in America, has a 9 to 5. If you're learning how to trade, $269 shouldn't be too crazy for you, okay? Most of you have lost more than that in the market anyway. So you're risking $200, $300, we'll call it, to make $1,000. It's really not that bad of a return. And you can see that's exactly what played out here in the risk reward. Now, the thing about risk reward is when you're risking, say, $269 with $300, okay, you have 3 to 1. You don't need to be right that many times for this to be profitable. That's the key. So if you're going to go for a big swing, swing big. That's exactly what I did here. I swung big and I was right, meaning that if I'm wrong the next 4 times, it literally all those trades will net out to even. That is the key to risk reward, is swing big, hit it, and then whatever that money you make over, then you can use that to make more speculative type bets. But here you go. Here's a trade. 102.69, 1117. So about $12 per share. Pretty good. I'm doing mental math while I do this. So if I'm off, roast me in the comments. I don't really care. It was a sick trade and I wanted to share it with you. Now, people are going to say, well, Ellie, you said don't fade the trend. You say purple profits, you got to be above the pre-market low and blah, blah, blah. I already know you're going to say this in the comments. So here you go. Listen down. Okay. How this aligns with the time frame tango. You can see the 10-minute is a 820 crossover. It gets above it. Here's the flag. Here's our entry. And then goes bullish. The 30-minute gets above the ADMA, curls at the end of the day, giving us a nice launch pad towards the end of the day. So before you go down to comments and start typing, okay, here's your answer. So here you go. This is how it aligns with the time frame tango. It flips bullish on the 10-minute. It flips bullish on the 30-minute, giving us that range expansion as we can see. Here's our reversal here, and then continues to make higher lows all the way until it closes at the highs. This is how you do a reversal. So in summary, okay, in order for a market to bottom, there has to be a trap. Someone has to get bagged, whether it's you, it's me, or it's some guy at JP Morgan, okay? Someone has to get bagged. That is the way it goes, because a trap, think about it, right? A bear walks in the woods, it puts his hand in the trap and gets stuck, okay? He starts screaming, he starts crashing out, okay? You need to have a trap. The same thing when traders get too greedy on the short side, what happens? They smack it down. They start screaming. They start crashing out. They cover, causing the market to go up, giving it the boost it needs. Okay. Traps is off 3 signals. Okay. Notice there's no emotional here. It's too low. I got to buy it. Looking at you, Bitcoin guys. Okay. There's none of that. Okay. It's all technical based off 3 signals. If you do not have a minimum of these 3 signals, there's no dip buying. Okay. There's no crashing out and buying Bitcoin when it breaks 100K. It's not going to happen because you bought at 99, 95, 90, and now it's sitting, if I check my phone, it's probably like 80K right now. Okay. You're crashing out. You're donating money. Stop. Wait for these 3 signals and then you can make some money. Okay. Next, don't get involved in Miami bombs. Exactly as I just said before. Miami bombs, emotional damage. You don't want emotional damage when you're trading. Okay. You already have enough from all the money you lost. So stop. Okay. Stop. Don't just keep buying it and dip buying it and hoping it's going to bounce to get you out. Okay. I don't sit in trades and cross my fingers so I get out break even. I sit in trades and cross my fingers to hope I can feed my family. See, that is the difference. Remember, a natural bottom takes time to develop. It has to be raised right. Get good food in her. Okay. More good food in the stock. Make sure it has enough momentum. Okay. It's not a butt choke, but bottoms take time to develop, right? You have to have all the sort of stars align in order for it to happen. Otherwise, they can slow sell this thing like you've never seen before, and you are going to donate all of your money to the stock market gods. And next, focus on one good trade at a time, okay? You're just focus on when that reversal comes, you're prepped for it because you watch this video. Don't try to catch a reversal every single day because these types of trades are rare, but when they happen, they pay extraordinarily well. And lastly, okay, catching falling knives only costs you fingers. Okay, I used to make this joke all the time. All right, if you're going to catch a falling knife, what's going to leave you? A bunch of stitches and a really difficult time explaining to your family why they can't get any Christmas gifts. As always, thank you for watching. Join a free Discord. December, lock in. Have a good night.